Hello, hello. Okay, can you hear me okay? Just want to check, sounds all right. Good morning, good morning. Yep, thanks for that, BL. I don't know what happened. I was testing the sound, all worked fine, and then just as we start, sound goes kaput. Okay, so as you would realize now, we do have a little bit of a different layout. We're here. Sound is good now. Thanks, Val. Thanks, Diana. Thanks. Okay, good, good, everyone. Jan B is here. Okay, so the sound is good. Hey Jimmy, how you doing? Just want to let you guys know that this is a bit of a different layout. So just bear with me and we'll get through this moving forward. Okay, this live market analysis is sponsored by Max Global Markets, a brokerage that's registered and regulated by the Monetary Authority of Singapore, MAS. The Max Global Markets has no control or influence over the contents of this webinar, which is generated by an independent party, myself. Max Global sponsorship of this video is only for promotional purposes and does not imply support of the material or viewpoints represented. The views and opinions represented in this study are those of the independent entity created it and do not necessarily reflect those of Max Global Markets. Information on this analysis is offered solely for educational and informational reasons and does not constitute financial advice. Trading in financial markets involves substantial risks and there are always a potential for losses. Past performance is not indicative of future results. Before participating in any trading activities, it is crucial to fully consider your financial situation and risk tolerance. This session may be recorded, well, it is recorded and shared in print, audio, and video formats without notice. So with that rather long disclaimer done, just want to let you guys know that this daily market analysis at 3 p.m. on a daily basis right now is sponsored by Max Global Markets. So if you want to check them out, they are the newest broker in town to be regulated by the MAS with an attractive goal spread starting from 2 cents, 0.02. Sign up for a live account now using the QR code below and grab a 20% bonus plus cash. Terms and conditions apply. Limited claims available from now until the 30th of November. Okay, so with that, I just realized. Let's start that. Okay, there we go. So if you have any questions about the brokerage, do let me know. Put it into the chat and let me know. And a big good morning and a welcome to everyone else on the session. Hey Rachel, how you doing? Hey Ola, hey Ismat, hey Ahmed, hey Jimmy. Okay, and if you guys can help me out, click that like and subscribe button. That would help massively. I'm guessing that you guys can hear me okay now. Yes. Okay, so I saw something. Ayakami jumped onto the EU trade this morning as I saw a gap. I hope that it's working out well for you, Ayakami. Ola, I'll do that comparison. So I also have just launched, or well, not have just, on Friday launched a brokerage review playlist on my YouTube channel. So I'll be doing a couple of different reviews of brokerages. I'll get back to you on that, Ola. Okay. Good question there. So I hope you guys had a great weekend. We had the non-farm payrolls last week on Friday. If you were on the session, we saw a lot of volatility, but the markets pretty much resumed back to what it was doing before. Okay, so we'll do a quick review of what happened last week on Friday. Big surprise here, non-farm employment change number was 2 no, was 187, got revised up to 227. Expected a 171K, came out at a 336. Okay, but we actually saw unemployment. So that was a big surprise, huge surprise there. I think Robbie got it right by guessing it was going to be that 300 number. Didn't think it's going to be that big. What we actually saw with that news release at 8:30 on Friday was that. Okay, 8:30 on Friday, when the news got released, we saw the dollar spike right up to that 106.80 region, hit that resistance level, failed to break above, and also you see there was way outside of the Bollinger, came right back down, found that support again at that channel, and now pushing back up. Okay, so that was what happened, and I did a quick yen trade before the news. This was, okay, there we go. This was before the news. I got in, we had a quick push to the upside, and then thought that it was going to continue up. So I made about 30 something pip to the upside, and then tried to trade it up further. The thing was, I rushed into that trade a little bit. It was outside the Bollinger. It came right back in. It did not hit my stop loss. I actually closed out a little bit earlier than that. But then we saw the yen pretty much sit right across. So not a lot of trades despite the big move. We actually saw most of the pairs quick scroll through or spike up and then retrace back down again. No, spike down and then retrace back up again. Aussie dollar as well, spike down before spike retracing back higher. Yen, we saw pound dollar came right down to that 61.8 retracement level, support level before pushing back up. That was a one I was very keen on but did not play out as expected. Euro dollar as well came right down to that support before bouncing back up. Okay, and then Swiss franc spot up and then down. So we see the same pattern apart from the US CAD where we were looking at, how did my thing get deleted? We were looking at that as a bit of a head, big head and shoulder pattern with that neckline. So it broke that neckline and it would trace right down. Okay, so that was what happened on Friday with the non-farm payrolls number. A big surprise, but yet we saw it push back up again. And then on, I think there was a power talk supposed to come up, but it didn't happen. Oh no, Biden. That was it. So it was shifted 51 minutes later. So it was supposed to be at 11 o'clock, about 11-ish on a Friday, got pushed to 12:21 a.m. GMT plus 8. Right, since I've taken office, we've created 13.9 million new jobs. It was quite a positive move, but yet we saw the dollar weaken. Okay, if you look at the headline there, more tax cuts for wealthy is not what the US economy needs now. No meeting with Xi, was told I had no choice on building new war sections. Okay, fine. So the main thing was that big jobs numbers created, but yet we still saw the dollar, spike to the strength, and then after that, retrace back down. Okay, retrace back down. Very unfortunate. Biggest I don't know what to say. I'm a bit lost for words when I found out about what happened in Israel and the Gaza, between Israel, the Hamas, and the Gaza Strip. The things that are happening there is just beyond imagination. That's why early this morning we saw a big gap up on the dollar. Right, we saw a big gap up on the dollar as the conflict in Israel, and I have many friends in Israel as well. So, thoughts goes out right to them. The conflict in Israel, the uncertainties in a global conflict sense, saw that move towards reserve, right? Saw that move towards reserve. And that's why we saw the dollar index go from, it ended at about 106, It gapped up to that 106.30 level, retraced slightly before continuing up. It looks like it's going to be a move towards reserve. It looks like the dollar strength is likely to continue. In addition to that, when we look at gold, right, it found that we were talking about that support, we were talking about that small spike down, grabbing of liquidity before pushing back up. It could, you know, on hindsight, you look at this and say, yep, it was all a technical play, but no one would have predicted what happened or what is happening in Israel right now, Israel and the Gaza Strip right now. So that spike down, that big push up is really that move towards reserve, right? That move towards reserve. And as I was sharing with you on the Discord channel, gold with that big drop, you know, it's found just this morning, it found that 61.8 level, right? Found that level and then retraced, and it's still trading below that point. Looks like we might see a bit of a retracement now, especially as the dollar continues to strengthen. Okay, so very unfortunate of what's happening in that side of the world right now, but you know, we'll continue on with the analysis. Hope everyone's okay. With that, then looking at the news for today, Monday, today being Monday the 9th of October, we had all-day bank holiday in Japan. Observance of Health Sports Day, don't know what that is, but Japanese banks bank holidays. We have a Canadian bank holiday as well in observance of Thanksgivings, and also in the US for Columbus Day. So typically, you would expect that this is going to be a bit of a quiet trading day, right? Typically, with Japanese on holidays, with the US on Columbus long weekend, with the Canadians on their Thanksgiving, you would expect that this is going to be a bit of a quiet session. But I think that it's not one of those situations because of what's happening in terms of the conflict. I think that there's going to be a move towards reserve. I think that we're going to see some choppy price action as we see that dollar continue gaining some strength, right? As that move towards reserve continues. With that with that said, on Monday for today, tomorrow we do not have that many news, but what we might move markets is the FPC meeting minutes and the FPC statement. Right, the FPC meeting minutes and FPC statement, because it might give us some hints or ideas about what's likely to happen in terms of the monetary policy front for the UK. And then on to Wednesday, PPI, core PPI, FOMC meeting minutes on Thursday, GDP for the UK, continued with CPI data for the US on Thursday evening, GMT +8, through to Friday, consumer sentiment. So I think the main things to consider for this week would be, one, whether the conflict is going to escalate further, you know, what's going to happen in that front on that side of the world. And then two is that CPI data to be released from the US on Thursday. In addition to that is when we look at the CME Fed tool or projections, right? It's relatively unchanged. It was on the 72.9. Right now, 78.2% likelihood that the Feds are going to hold rates at the current level, right? With a 21.8% chance for a 25 basis point rate hike. So the NFP number from Friday did not change the views or the likelihood or probability of the Fed Reserve tweaking rates despite the strong number. Initially, when I saw the strong number, I was thinking that being such a strong number, we should see this percentage drop a little bit and this pushing up a little bit, because on a stronger employment number, that's going to give the Feds a little bit more confidence to pursue or to continue with maybe one last rate hike, to ensure that the CPI data really does continue coming down a bit more consistently. Right now, 3.7, they're expecting at 3.6. Okay, so we'll see maybe after this data on Friday, this percentage might change a little bit more. But I think that if it does drop more than that 3.6, maybe the Feds will consider it as job done. They'll hold rates, and then just let the impact continue on and through to next year, and then decide from there. So right now, the next decision or the next rate hike decision is still up in the air. Let's look at a little bit more data coming around before we're going to see any big change in that probability. And I'm losing my voice. So, back to this. Nothing much for today, so it'll be mostly a technical play, mostly a technical analysis, mostly a technical play with the overall bias towards a possibility of a move towards reserve. Okay. Hey, Pips Apprentice, how you doing? Hey, Ater. Hey, Matic. So with that, then looking at the dollar index chart right now, this was yesterday's move. This was Friday's move, not yesterday. Hey, Robbie, how you doing? This was Friday's move. And just on the short term, you can see that it's coming back towards that 61.8 level. Right, so it needs to clear past that point. This one is done, so it's broken that, take that away. 61.8 right there. Okay, and then if we look at the longer term move to the downside, 61.8 is right there. It could come back up. Just checking this 50 is well done. Okay, take that one away. So we have 61.8 right there on 106.80. So what needs to happen now on the dollar? With no big fundamental news to be released up until maybe Thursday, looking at the possibility for a move towards reserve, expectation is that we're likely to see more upside on the dollar index. Okay, we're expecting to see more upside on the dollar index. A lot of you were talking about the gap. It looks like, if we zoom in a little bit more, it looks like the gap might have almost been filled right after it got gapped. The next 3 hours came right back down. Looks like it filled it before pushing back up. So I wouldn't consider this gap too much at this point. Now the question is that it needs to break above that 61.8 level, above 106.60, and then 106.80 before 107.20. Okay, so what I'm looking at here on the dollar for the 9th of October is a move towards reserve. So we're looking at the dollar. Needs to break 106.60, which is the 61.8% level, before we could see it. I think, with no major moves, no major additional impact or news coming out, I think that the nice round number of 107 is going to hold the dollar. Okay, so it needs to break over 106.60 before it could reach 107 round number. Okay, so that's the view. It needs to break above this point, this 61.8 level, before we could see it get to that 107 level. And although we have 61.8 here as well as a resistance, that was because of that previous swing level here. I feel that with that level there, we could still see it climb and touch. So we're still looking at some dollar strength come around because of that move towards reserve. Fair enough. Put into the chat. Let me know if that makes sense for you guys. And now that that trend line or that channel has been broken, we can take that away. Okay, we can take that away. I'm just checking this, see if that works. That could work. Okay, there we go. So we do have an upward trend line with those 2 points there, pushing price up, breaking above that level to 107. I like that. Okay, so there we go. All right. So with that said, all right, that's the overall view for the dollar index, looking at potentially further upside. Then looking, we jump to gold first, since I have it up here. It came down, test this level, push right back up. Now holding 61.8% is holding well, right? It held that price level well. The tricky thing here about gold is that the move towards reserve, right? The move towards reserve should see the dollar strengthen. It should see gold strengthen as well. So this is the point where correlations are not 100%, because on a normal day, if the dollar pushes higher, you should see gold trade back down. Right? On a normal day, as the dollar gets stronger, you should see the inverse relationship. You should see gold trade back down. But right now, anticipating that shift, anticipating the shift towards reserve, what's likely to happen, what could happen at this point is for gold to consolidate here, right? Just below that 1855 level. Consolidate along this point, and then what I'll be looking for is that move towards reserve, whether gold could break above 61.8 back towards that 1885 level. Maybe not as much. Okay, so maybe it will come up to that point, 1880. Okay, so why I'm highlighting this area is because I'm considering that previous swing levels, which we saw on the 28th of September and 29th of September, tested before turning back down. So right now we're looking at gold possibly consolidating along 1855 looking for that breakout towards that 1880 resistance area as a shift towards reserve. Yep. Okay, so change the sequence a little bit right now. So looking at gold, consolidate along 1855, could break out towards 1880. Shift towards reserve. That's why I think that gold could push up. Consolidate 1855, could break out towards 1880 as I see a shift towards reserve. Okay, that makes sense. It needs to break past this point. So when you see what happens here on the dollar index. With that, then now back to the sequence. So take that away. That was during a non-farm analysis. Found an interim support here at 59, almost 5920. Now Kiwi dollar pushing back up. 61.8 is broken. We can take that one away. And what you'll notice here is a channel to the upside here on the Kiwi dollar. Right, a channel to the upside here on the Kiwi dollar, bouncing off this point to push up. Broke past this point. 38.2 is right there. So if we cleaned up this one, you see that it came very close to 38.2 before pushing back up off the top of the channel. Let me take this middle line away. Okay, so we see this push right up. Now the question is expecting that dollar strength, right? Expecting that dollar strength means that we should actually be seeing the Kiwi dollar push back down. Right? We should see it be turning back down, especially if the dollar pushes up. Right now it's holding at 61.8. So I'm looking at this. Following that trend might be an alternate scenario where you could be looking at, if it breaks above 5990, we have a 30 pip and a 15 pip. Break up to the next, up to that trend line. We could do that. You know what? I want to see, I would actually prefer, because we're looking at this maybe pushing up, you have a bit of opportunity. Okay, so what I'm looking at here is if it breaks up to the upside, great. What I'm actually thinking is that it might do this, come up, test, and then push right back down again. That's what I would be ultimately looking for. So it's a two move kind of scenario. At this point right now it's 5950, 5990, stop loss 15, take profit 30. Then once it hits this point, we might be looking for a sell back down. Okay, so we're looking here at a Kiwi dollar buy 0.5990, stop loss 15, take profit 30 pips. Makes sense so far? Let me know, put it into the chat. I want to see, I think this could happen, but I'm actually more interested to see a rejection of that resistance, and then I would actually be more keen to see it break down from this point, a 30 pip stop loss, right back down 60, 70 pip, or even almost 90 pip to the downside. So I think it's a two-part scenario: push up, push up, test, reject, come back down again. But that's the first move I think that's most likely going to happen following that upward trend. Okay, then onto the Aussie dollar. Right, Aussie dollar held at 50% right there. So on Friday, Saturday, we saw the Aussie dollar test that 50% retracement level, get rejected. I think at this point we can come down here because it was broken. So here's a bit of a tip, is that why I had the level here, but yet I very quickly moved it down here, is because as much as this was a support level, we saw it break, we saw it test this level, tried to break. So it's broken too many times already. So straight away I've moved it down to this as the more significant support level. Okay, I'm looking at this as a more significant support level because of these points here. I wouldn't really looking to buy the Kiwi dollar up on the short term, maybe dollar weakness or Kiwi dollar strength, pushing it back up. What I might be looking for here is a test and reject of that 50% level. So a test and reject of that 50% level and that nice round number of 0.64. Right, nice round number of 0.64 that we can see right there, tested on Friday, came very close late on Friday night or early Saturday morning. So that becomes a bit of a resistance area. So what I'll be looking for here would be expecting that dollar strength to come back into play. 6380, 6380, stop loss 25 pips, take profit 90 pips. I don't see why it should go down 90 pips with no major news unless we see massive dollar strength, but that would be the idea for the Aussie dollar. Right, so this was on the Kiwi, we're expecting it to push up before turning back down. This one might be a smaller push up, or not a worthwhile trade to push up, but we're looking for that rejection. So this will be a little bit later on that might happen. 6380, round number resistance, makes sense. Okay, 6380.25 to 90. Okay, so 6380.25 to 90 pips. Okay, so this way, what I have now is a sequence, right? A bit of a sequence where I might be looking at short-term push to the upside, break above that resistance, and then the longer-term move back down again. Then, with the US yen, the thing about a shift towards reserve, here's where it becomes a bit tricky, is the shift towards reserve. The yen is also a reserve currency. The yen is also a reserve currency. So if this continues to escalate, or hey, if the US ends up at some level becoming involved in that conflict, then we might see that as another reason why the yen might strengthen again, right? Why it might gain some strength. And you see that despite what happened during that period, when the yen was pretty much in that 45-degree climb to the upside, probably maybe a bit more than 45-degree, right? That steady climb to the upside. Since that possible stealth intervention from the Bank of Japan, right now the upside moves on the yen seems to be limited. It seems to be capped, right? It seems to be struggling to climb strongly to the upside. Since that move, it came back up, tested 149 almost 149.40, failed, come back down again. Tried to climb, came back down again, formed a bit of a double bottom. Again tested 149.40 but failed to push back up despite a strong NFP number on Friday. So right now I'm looking at this and I'm thinking maybe, right? And this is 149.40 right there. Maybe we might have seen limited upside, or we might be continue to see limited upside on the yen. Okay, which actually I don't want this, I'll put this here. Okay, again, because this was broken so easily when I had it here at the start, right? This was easily broken again. So it doesn't make sense to have a support level at a point where it's easily broken at that 148.80 level. I've put it down to this 148.30 level because that's where it found the support and bounced back up. Okay, so it's important to also make sure that your lines are kept reasonable, or review your lines. So it tested down, broke 38.2, 50% is right there. What you could be looking for on the US yen is a shift. Again, we're expecting dollar strength, but we could see a shift to reserve on the yen as well. If it breaks below 149, 50% being at 148.90, 148.85, stop loss 20, take profit 50 pips to the downside, back towards the support. I would rather be looking for this rather than that continued upside, just looking at how it's struggling to push up. That's one of the main reasons why we might see upside move, but that's one of the main reasons why I'm looking at a potential retracement back down again for the US yen. All right, so 148.85, 20 to 50. If it climbs up, even better for a possible selling scenario. So 148.80, stop loss 20, 85, stop loss 20, take profit 50. 148.85, stop loss 20, take profit 50. Okay, like what I was telling you just then is that if it sits here and does not push down, let's say the yen sits right there and actually pushes back up towards that resistance, then like I've been telling you all last week, I would love to actually see the yen push back up towards 150, because I would again be poised to take advantage of that move, or put a possible intervention again at 150 for that big spike down. Okay, so if it pushes up, then I would have selling orders maybe at about 149.80, right? Stop loss 40 pips. Take profit, just immediate move to the downside would be about almost 150 pips to the downside. So if it drops, great. If not, then I'll be looking for a selling opportunity back down again. And I would love to see that, because that would be, if that happens, it'd be a quick 150 down. All right. Okay, then on to the pound dollar. So that move happened. If we took that push right back up, you see that it's 61.8 is right there. Formed a bit of an equal high right at that point. Came right back down, 61.8 is there. So if you look at this becomes my whole support area. This becomes my support area. Pound dollar is right in the middle of that support and resistance level. It's right in the middle of that support and resistance level. I would be a little bit more cautious. Needs to break down to the support. Wouldn't do anything on the pound dollar yet. Checking the news, you'll see that there's no major pound news all the way, well, until the FPC tomorrow, and then the GDP number on Thursday. And Governor Bailey speaking on Friday. Institute of International Finance in Morocco, no, don't worry about that. So I'm looking at this pushing down. If you wanted to sell down 1.2170, take profit 50 pips, 45 pips to the downside, 35 pips. Okay, again, this is a fully technical play. If you took the tail on this, that would kind of, you could look for that. All right, and I think that with 20 minutes, almost just under 20 minutes to the close of the hour, this might work. It might not be a H1 kind of trade. It might actually be an M15 kind of trade, but this would be something that you could look forward to, especially in the next 3 minutes. If it closes like that, I think we could see that come down to test that support again. And this could be quite soon. This could be quite quick. So 1.2170 stop loss 35, no more than 35. It can even be lower. So once I trigger that, if it continues down, I'll move that to break even with a take profit of 45. Nice one, Robbie. I'm going to get Robbie to do my live sessions next time. We're almost the same mind. 1.2170. That's the difference when you sat with me and traded with me before. 35. Take profit 45. Okay, this is a short-term trade. Dollar index pushing right back up. I actually like that. Okay, euro dollar pushing right back down, so take that one. Actually, that one will stay where we shift that along. So right now you see that euro dollar 61.8 does not make sense. We'll take that one away. Now that it's pushed right back up, The fib levels here don't make sense as well. We can take that one away. I'll put this as my support with a consideration of these points here. I like the pound dollar more than the euro dollar to sell back down. All right, but if this drops, just checking something here, is that if you sold it here, you have a 60 pip move to the downside. Again, this is not an H1 kind of trying to trade. This is a closely managed kind of trade. I do see the euro dollar come down. 0.524. This is about 30 pips. Yeah, it's going to come down about 30 pips. It needs to see what happens here before. So what's going to happen is euro dollar is going to come down to this point. Right? It's going to come down to this point, which is on the way. It's already on the way. And pound dollar is happening as well. So euro dollar on the way down towards 1.0490. Right, 1.0490. If it tests this level, most likely I think that it's going to continue back down again towards the support at 1.0452 or 5, yeah, down to this support of 1.0450. So what I want to do is I want to look for a reaction along 1.0450. Or, yeah, okay. So the safer move here, I'll show you what. The safer move is to wait for a reaction along the support. Then you could be looking to sell down or to look for a bounce to buy back up. What you could also be looking for right now is for the candle to close, right? In 15 minutes, candle closes below 1.0520. So it's actually quite close. If it closes below this point, you have a 30 pip, you have a stop loss of about 20 pips. And then you could even go down to almost 70 pips to the downside. That's what I would be looking for. Let's see this move, breaking 61.8. Okay, so below 1.0520, which is very, very close right now, right? Sell down 20 to 70. 1.0520. Looks like something I might, yeah, this is taking a little bit more risk, but it looks like something I might be quite keen on for myself right now, even on the stream. That's why I'm a bit all over the place, because I feel like this might be a trade that you will have to manage. You have to watch. This is not a set and forget. Okay, so what I mean by, I'm a bit distracted. What I mean by this is that a trade that I would want to get into and manage, not a one that I would set and forget, because there are levels at about 1.0490 that might bounce, or if it breaks down, we'll see that move continue down again, and it's very close. It's only 12 minutes to the candle close at this point. Right, and I'm not so worried about Bollinger Band as well. So, yeah, 1.052020 to 70, 1.052020 to 70 pips managed. Okay, I want to see it bounce a little bit. I want to see it sit there. I want to see it bounce a little bit before that continuation down. Then on to Suyun says, yes, sell euro or pound next H1. Yeah. Make sure, that's a good point there, is make sure it sell euro or pound, not sell euro and pound, because they do tend to move quite similar. If you get in on both, then you're going to see, either you make money on both or you lose money on both. It's not worth the risk to try and take double or nothing. Okay, and also the standard disclaimer applies. When we spoke about the Swiss franc last week, we said likely to climb to 9220 for reaction at that resistance. It did not do that. It went up a little bit because of the dollar strength, and then it spiked right back down. But now if you're looking at dollar testing that 61.8 and possibly pushing back up, pushing higher, it's found that 50% level quite well, found that support and pushing back up. So if you took that, and you see now that it's breaking that 23.6 level, we could see this continue up. So I'm looking at these two levels. Right, I'm looking at this formation bouncing up. If it closes above 23.6, if it closes above 9120, we could trade it up to here with the next resistance quite well placed. That's what you're looking for. So you could be looking to buy it up 9130, 80 to, I don't want it below there. I would, because it's the Swiss franc, I would do about 20 pips, 25 at the very most. Break above 23.6, go up, test, yes. Okay, with a consideration at 9180. 9130, stop loss 25, take profit 80. So on the US Swiss franc, we're looking to buy 0.9130, stop loss 25, take profit 80. And then we got a possible hesitation at 9180. At 9180. There we go. Okay, so it's still at that point. That makes sense. I like that. I like to see that retrace. That's holding that level. Very nice. 8 minutes to the candle close. I'll be looking for either the pound or the euro. All right. So it might be pound. To me, it looks like it might be pound first and then the euro. Yeah. And then onto the US CAD, we see this head and shoulder break, didn't really go all the way because of that dollar strength pushing right back up. And bear in mind that this was because also why we saw the CAD continue trading lower, despite a lot of volatility. You can see the tails and spikes there on Friday night. Right, you see the tails and spikes there on Friday night. It's because we did see employment numbers for the Canadians being very strong. 63.8K employment change compared to the previous of 39.9 and the expected of 22.1. So very strong number in terms of employment change, and unemployment rate was expected to climb to a 5.6, slightly to 5.6, but it stayed at a 5.5. So again, strong number there for the Canadians. As the Canadian employment numbers were strong, we saw that push towards the downside. But now expecting that dollar strength to come back into play, this was a support turned resistance level. Look for it to break, to push back up. You could be looking at a long 1.37, so above 1.37 if it breaks above that resistance. Right, if it breaks above that resistance 1.37, 30 pip to 80 pips. I wouldn't even take it all the way to that resistance. I'm looking at this as a resistance area. So I'm considering that whole thing there. Right, sitting right there. Could you sell it down? Yes, but I would be a bit more hesitant. 1.37, I'll be looking to buy it up 1.37, 30 to 80. So my US CAD, I'll be looking to buy one as it breaks above that resistance 1.37, stop loss. Can I do a tighter stop? No, I wouldn't do a tighter stop. 30 pips to 80 pips. Okay. There we go. That's pushing up. That makes sense. I'm happy with that. Okay. Short and sharp. Any questions at this point? For those of you, if you're watching and you're new to the session, the link is there for the Discord channel if you haven't already. And also, if you would like to go check out, scan the QR code at the bottom there. You can check out Max Global Markets. They do have a attractive gold spread of 0.02, 2 cents. Sign up for a live account now using the QR code and top up to grab a 20% bonus and cash. Terms and conditions apply. Limited claims available from now till 30th of November. If you'd like more further information, you can reach out and let me know as well. And if you haven't already, I'll see you on Discord. If not, please help me out. Click that like and subscribe button as well. And for now, trade well, trade safe. I'll see you all tomorrow. Same time, same place. Take care now. Bye-bye.